Okay, in the last slot that we got before the first break, we've got our Chief Financial Officer, Malcolm Holt, coming up to the stage. He's going to go through the financials for 2022.
Thanks, Jeremy, and good morning. Doesn't seem like another year's gone by, but it has. Okay. So, our statutory accounts were audited by our auditors Price Bailey during February and March. This is what normally happens. And they're approved by our, having gone through the Finance Committee, approved by the Board of Directors and the auditors in April. These were included in a link in the agenda for this meeting, which was sent out on the 25th of April. So hopefully the opportunity to have a look at them has been there. So in comparing 2022 to 2021, obviously the bottom line there, the surplus at 1.7 million last year compared with 0.3 million this year is quite a contrast. But if we reflect back, 2021 was a really unusual year. Most of our activities were constrained by COVID, and thankfully, at the same time, our revenues held up. In resuming our more, what is a hybrid working pattern, our costs have gone up quite significantly at the same time as higher inflation impacting us. This was somewhat expected when we put our 2022 results together, and the small surplus we've got there was a lot better than we expected in our budget. However, there was a little twist in the tail at the end. For the last 2 or 3 years, we have advanced bought US dollars to cover our capital expenditure, and with the at that time improving exchange rate for US dollars, we were sitting on a rather large unrealised exchange gain. We had some debate with our auditors as to whether this should be carried forward or not, and we were persuaded that we should release this. So we had a fairly large exchange gain released into 2022. The consequence of that now is, with the exchange rate moving the opposite way, we're likely to be facing an exchange loss in 2023. Compared with budget for 2022, we were 5% below budget on sales and on direct costs. And just to explain, our admin expenses were significantly affected by the exchange gain that was released, but at the same time, our admin costs were lower than expected. The rising interest rates that's happening and continuing to happen meant that we made a higher interest receivable, there about 100k, compared to the rather meagre 12k in the previous year. So the net result of 283k was considerably better than the 436k loss that we had expected and budgeted for. Just a quick look at the balance sheet at the end of 2022. Our investment in the networks continues, as Richard explained, with our net assets after depreciation rising by 13%. And our balance sheet remains remarkably strong, with our current ratio being 5 times, which is high, but that has to reflect the nature of our business being a membership organisation where share capital doesn't feature into it. That sort of covers 2022. Just a quick look at where we're going with 2023, which is not the picture we had hoped for. But we made a decision when we put the budget together for 2023 that we would absorb the high inflation costs that were coming through and help our members by not increasing our prices. Consequently, we set ourselves up for a pretty challenging year. The lower than budget start has also been affected by a later than expected receipt of money from the Saudi Arabia projects. And, as I just mentioned, in addition, the opposite effect of releasing exchange gains into 2022 means we're now hitting exchange losses in 2023. But, as I say, we are a strong company, we plan to absorb this. And I think that's probably all that I had. I open the floor to questions. No?
No, none appear to have come through. Any
Oh, come on.
last questions before we...
This is once a year, you've got to have a go. Come on.
Okay, well, if
All right,
that
thank you
is
very much.
the case,
you.
we'll leave that there. Thank you very much indeed, Malcolm.
Thank you.